Banks can do many things to make your financial life much easier. They do this by offering a wide variety of financial services such as credit, loans, and accounts. These accounts come in many forms such as checking, savings, and investing, but the type of account you'll probably use the most in the near future is a checking account. Checking accounts work by holding money that you deposit and saving it until you access it with either a check or your debit card. With the checking account, it is very important that you pay attention to the balance of your account, because you are penalized if you write a check or use your debit card for more money than is in your account. If you write a check for too much, it is called a bounce check, whereas using your debit card for more than your account value is called overdrafting. You will usually be charged a fee for these, and they will lower your credit score. You can prevent overdrafting up to a certain amount with overdraft protection, where the bank will give you a loan for the purchase, but expect it paid back with interest. This will usually not hurt your credit score, as long as it is paid back. The other type of account that you will probably use is a savings account. They will pay you higher interest than a checking account, but you will need to go to an ATM or the bank in order to access your money. The three major types of savings: regular savings, where you place your money in the account and can access it at any time. These generally have the lowest interest rates and the lowest minimum balance of similar types of accounts. The other type is money market, which pays slightly higher interest than regular savings, but usually has a higher minimum balance. Money market accounts also may allow you to write a limited number of checks and make a limited number of transactions. The third and final type is certificate of deposit. They have the highest interest, but you cannot withdraw your money until the certificate has matured, which means paid all its interest, without losing some or all of the interest. Interest in these accounts is usually compounded, which means you receive interest on the amount you put in, plus the interest you have already received. You can play with some of the calculators to see how different patterns of depositing or withdrawing money over time affects your account and your balance. There are also many responsibilities that come with being an account holder. The two big ones are knowing how much is in your account and spotting identity theft. A very helpful tool for doing this is online banking. You can view your account balances and transactions from anywhere with the internet and can contact your bank immediately if you notice anything strange. You even may transfer money between your accounts, so you may access money as if it's in your checking account or move it to your savings account where it receives higher interest. A very important part of starting your account is choosing the right bank for you. Large multinational banks usually have a large number of branches and ATMs. They also will offer most, if not all, financial services, including online banking. Local or regional banks are usually open longer hours than multinational banks, but are usually limited to a certain area. Online banks can be accessed from anywhere, but they usually offer a limited number of services. Credit unions are non-profit organizations which vary in size and usually have better interest and fewer fees than for-profit banks, but generally offer fewer services. It can be very tricky to select the right bank for you, but remember, it is similar to other consumer choices in that you have the ability to decide which one you like the best. Be sure to look for the FDIC logo when choosing a bank. That is how you know your money is safe. You can know this because the FDIC insures your account for up to $250,000. One of the trickiest part of banking is avoiding fees. Overdraft fees occur when you try to withdraw from your checking more than you have and may be prevented by paying attention to your balance or purchasing overdraft protection. Stop payment fees happen when you gave someone a check, but you want to prevent them from cashing it. Balance inquiry fees are fees for checking your balance at an ATM and can be avoided by visiting your teller or using online banking. These fees aren't usually charged too often. Extra check fees are when you need to order more checks. Replacement statement fees are used in order to order a new statement or an account summary and can be also avoided by online banking. Banks may charge a variety of fees, so it is important that you check a description of fees before you open an account or order a service. If you read these carefully and know your balance, you can avoid having to pay most, if not all, fees.